WACC, weighted average cost of capital. That's what we look at now. The weighted average cost of capital is the average yearly percentage return rate our capital providers expect from us. It's a return expectation rate. The calculation is complex. Let's look first at how much they gave us and what they expect for that. The banks gave us 100, and let's say they expect a yearly return of 5%. That's the interest rate of the bank credit loans. 5%. And 5% out of 100 is 5. So they expect 5 per year. The shareholders gave us 20 in this example, and they expect more. They expect a higher return because they bear a risk, the risk of running the company. And if the company goes bad, they don't get anything, so the risk is higher, so they have a higher return expectation. Let's say they expect 12 percentage points more, which would be 17% in my little example. And 17% out of 20 is 3.4. And here we had the 5%, which brings me to 5. 3.4 they expect, and 5 they expect. Now we have a little specialty. When it comes down to cash and cash equivalents, we assume a fixed return rate of, let's say, 2% out of those 20 we have in cash. And 2% out of 20 is 0.4. And those 0.4 need to be deducted for that, because for that we don't have to pay a return on anymore, because we assume a return already. So 3.4 plus 5 minus 0.4 brings me down to, brings me down to 8. Per year, our capital providers expect a return of 8. The weighted average cost of capital now is that 8 in relation to our net assets. The net assets on the left side of the balance sheet are the total assets except the cash, because we already took it into account as a fixed return. So minus cash minus trade payables, because trade payables we don't have to pay an interest on. They don't expect anything. By the way, we have a separate video on net assets. So 132 minus 20 minus 12 is 100 net assets. And if they expect 8% on the net assets, if they expect 8 on the net assets of 100, they have a really yearly return expectations of 8%. Weighted average cost of capital, the average return expectations of all of our shareholders. We do need to achieve that, and if we achieve to cover that, we measure in the value added, but for that we have a separate video. Weighted average cost of capital.